Ira Epstein with your metals market, your weekend edition. This is your wrap-up for Friday, the 6th of March, 2020, and boy, what a volatile week. You know, I've been doing this since 1969. That's a long time, right? 51 years. Love it. Love going down, and I remember the trade floors. Now it's more fun upstairs, off the trade floor, believe it or not, than it's on the floor. But the volatility is insane right now. I mean, I realize people are wondering what to do, and that's the hardest problem. What's COVID-19 going to do? Now, the South by Southwest big concert music conference down in Austin was just called off. I think they get 400,000 people a year or something coming through that. It's an insane number called off. What's the impact of that on the economy? There. Now let's take that to restaurants. Let's take that to cinemas, sporting events. If this COVID-19 and all the test kits are going out this weekend through next week, a lot of them, if we find that there's more of the disease around the virus, what does that do to the economy? Has the market built it in? The market that's been in a state of collapse are your bonds and your notes. I don't know how else to say this. This is not a misquote. Per contract, that's up $6,000 today on one contract, up over $1,000 here in the 10-year. And the 10-year, would you believe that in January, we're at 1.3% and a fraction on the 10-year. We're at 0.773. You've lost almost 45% of the value. It's going down for a reason. The market is worried. So you've gotten your bid in the gold. Silver and copper not keeping up with it, but not collapsing either, because the world events in China have changed a little bit. China seems to be past the peak of the disease, but it did begin in January, and now we're at the end of the first week of March. So I don't know what the U.S. and Europe has to go through. As you can see in gold, the market had a breakout on the monthly chart, and it has followed through into an uptrend. And it's done a nice job of slightly getting over the band, the upper band, and pulling back. 95% of the time, whether it's a monthly chart, daily chart, weekly chart, the market's going to trade within these black Bollinger Bands. Think of it as your resistance point in the market. Not a trend changer, but the market respects it. Get over it by too much, you pull back. Momentum, still up on the monthly chart. We then go to the weekly chart, and for the week, you are up nearly 6.5%, and this is the strongest close in years. The bulls have taken control of the market. When we take a look at the market, this week didn't get anywhere near the volatility of last week, but it was an outside week. Now, was it an outside week up or down? It was an outside week down. This week you got to move back up. So last week you were down 4.74%. This week you're back up 6.5. I'm not going to high or anything. Now, to create what I call a bear trap, I would like to see last week's high taken out if I'm bullish. Otherwise, it's holding back the market. And it only holds that way for 2 weeks. It's my own rule that I created many years ago, but it's done me well over the years. If that's taken out, it says that the people that got caught in this sideways action are now nailed. And obviously, we can see they are. That's the highest high the market's had. You can get these patterns at much lower levels. It doesn't matter that it happened to come in at that new high that we've made. What else has happened? The market's not been able to have follow-through to take out a previous low of 1561. Therefore, the swing line trend defines highs and lows. It's got a pattern of continuing with higher lows, higher highs. That's bullish. Until that's taken out, I remain in the bull camp on that. The market is over the 18-day average of closes. The bias is up. If 1561 were taken out, I'd be looking for the potential to get back to 1535, which isn't so bad. In other words, the 18-week average is jumping up rather solidly, about $8, $5 to $8 a week, as you can see. So it's probably going to be near 1540 or so as we reopen on Sunday. Where's the resistance in the market? Well, it's not there, but it is here. This is called a Bollinger Band, the black lines. They're not parallel to each other. It is an algorithm designed to keep the market within it 95% of the time. So the band adjusts to volatility, price. There's a formula, and you can go on Wikipedia and learn about that. But that's what the market is fighting. So you got over it, got thrown back under it. Now you're challenging it again. You finished today at 1672.40 for the week, just over the upper band. The odds of staying over the band are only 5% of the time. So the band's probably going to go up a little bit Sunday night, and we'll see if prices can follow through. What is the market Sunday night going to be worried about or be taking the sweat off its head? What's the news over the weekend on COVID-19? That's what we're going to be all studying. We're not trading the financial part of the market. We're trading the hit that virus can do to the financial market. That's what you're trading and pricing in, and gold is obviously one of those markets that look at it. In terms of momentum, you've stalled, and that's what price is telling you right now. The momentum is stalled out right here. When we come to the gold-silver ratio, this is still not pretty. I think one of you wrote me that the high was 100 to 1. Well, it seems that we're getting up to that. We're at 97.15, which means you need 97.15 ounces of silver to get 1 ounce of gold. Can you imagine pushing your bushel cart, push cart with it? That's a lot of pounds of silver in order to get 1 ounce of gold. But that's what it is right now. And when we look at silver, the chart's nowhere near as good as the gold. You got up on the panic last week to the upper Bollinger Band and almost hit the lower band. Haven't quite hit it, but you're down again. The market's trying to fight a battle here. You were up for the week marginally, 5%, and that in commodities is still a big number. The question is, do you make a run down here, or is it going to fight a battle at that 18-day average? You are not trending. Unlike gold, you have a higher high and a lower low. The bias is down because the market settled under 1745, the 18-day average, and momentum, well, down to trying to flatten out, but I'll give it the down to trying to flatten out. In the copper market, for the week, you wouldn't feel it, but you had a reversal back to the upside. The market is still in a downtrend with lower highs. However, it's stalled. You've now got higher lows. So the key, as I see it in the near term, is to not take out this week's low. If not, and the market gets up from here, this week's high was 263.00. This is 263.25. Take that 263.25 out, and you suddenly have higher lows and a higher high, putting you into the resistance, potentially, of the 18-week average of closes. Close over that number, and that number, by the way, will drop a little bit on Sunday night. Not a lot. It's dropping about 40 points at a time. That could turn the trend out of the downtrend back into an uptrend. Interesting. Platinum. You went down to the lower Bollinger Band 100-day average, the combination. I'm looking for a bounce out of there, and you got one, $31 this week. That's all I was looking for. It's not a trend. The trend's down. Lower highs, lower lows, momentum down. It's a bounce so far in an overall bearish market with resistance back up near 939. The dollar index, you know what I'm going to say. Here's the dollar last week. The market had a pattern of higher, at this point, higher lows, higher highs. You hit the upper Bollinger Band. Look at the dollar. It seems to stall when it does that. Market stalled out up there, pulling back. First support, 18-day average of closes. If that gives ground, the potential's down for here. But the trend's up at that point. You fell this week dramatically, 2% in the market, down through that low, held the 100-day in the lower Bollinger Band. You're not in a trend, though. You have a higher high, lower low. We know the market's in a state of panic because our economy's so big, and what if that COVID-19 starts creating havoc in it? This, by the way, is my news page that I set up all the time for myself. So what I do is I try in the mornings to give you an idea before anything gets going. I'm recording typically at 5:40 a.m., a video. You can also watch it on your mobile phone because it's part of a subscription that we give you. And through that, I'm going to cover 40 charts at a time for you. I start off giving you an idea on what I see in the marketplace, give you an idea with your own chart analysis, what I'm seeing with it. Think of you sitting next to me and we're talking. That's how I record. I'm not in the video. I've got a headset on. I'm typically got a cup of coffee. I swear to you, it's sitting there and I'm just going away talking. I've already read the news that I think is important out of Asia, Europe, back to America. I'll start off each report typically with what are the news headlines coming in for 7:30 in the morning when most of the U.S. news gets released, the financial data. I cover the markets in this exact sequence each and every time. And the reason for that is I set up on the charts so that when you're watching it through our website, there's a scroll bar. And as you move it, you can get right to the markets. What if you want to know just energies? Move right to the end of it. It lights up, tells you you're right at the beginning of the energies. Away you go. You're, of course, welcome to view the whole video. And they typically 18 to 20 minutes. I mean, I keep them pretty well timed in that area. Making them shorter, not really interested. I want to give you what I'm seeing in the marketplace and help you with my take on the market. I charge for it. Anybody getting up like I do at 4 every morning, 4:30 to read for you, they're going to charge. It's not expensive, $7.95 for the first 30 days. After that, we give you 2 ways to come in. You can either take it month, or which is really 30-day periods at a time, for $15, or buy a 1-year subscription for $156. Think about the pricing of this. I've priced it where a gold tick is $10. This is less. An S&P tick. Just go through that. You'll see what I'm getting at. If I can give you one idea in the course of a month, I've done my job. What if I give you an idea each day? I'm Ira. To find out more, go to our website under the word research. It explains it all, and that's where you sign up. You have a good day.